Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Thursday, June 27th, 2019. We are now in the final hour of the market, and as many of you know, I prefer to make my buying and decisions based upon the prices that are as close as possible to the close of the market. I feel like those are the most valid prices to make my entry and exit decisions on. So, all right. Well, the market is up today. Not too much. The Dow Jones up 31 points. It's up 0.12%. The Nasdaq's up 56.55. It's up 0.71. So that's definitely the strongest index right now. And the S&P. Actually, no. I take that back. The strongest index today is the IWM, which is the Russell 2000. That's up about 1.5% today. So, all right, let me just make sure and see if everyone can hear me. Hey, Andy, how you doing? Thanks for coming. I appreciate it. Maybe we'll find some setups today. Maybe we will. Let's see. But, you know, as always, we have to make sure that we're not just wanting a setup. We need to get a setup that's really a good setup. That's, important in being a long-term profitable trader, is waiting for the setup and take it if you have a legitimate one, but sitting on your hands if you don't really have a legitimate one. So, I know we always want to feel like we're trying to do something, that we're trying to make money in the market, but sometimes taking a bad position that leads to a loss. Obviously, it was better not to take the position all, right? A penny saved is a penny earned. So, yes, we will be looking for sure today, but only if there's something good. So, all right. Let's see. We have a few people on. That's great. Thanks for coming by, everybody. I do appreciate it. So listen, here's the setup for today. So first of all, we're going to go ahead and we're going to run the U.S. legal disclaimer. We're going to come back. We're going to look at my current positions, and I'm going to talk about when I got in them, why I got in them, what signals I took to get in them, and then how I'm going to manage them going forward from both a trailing stop perspective and from a stop loss perspective. And then after that, we're going to take a look at my watch list. We're going to go through each stock. We're going to analyze the technicals, the moving averages, the ATR bands, the RSI, and we're going to look for a potential entry. And then while we're there, I'm also going to show you some of my past trades, just so you can see why I took trades in the past. Winners or losers, both of them. So, and then after the market closes, if anyone has any questions about what I discussed today, please let me know. If you have any questions about trading in general, please let me know. If you'd like me to take a look at a particular symbol for you, I'm happy to do that. So don't be shy. The reason I started this channel was really to help people learn how to become better traders. And so if you have questions, please let me know. So, all right, with that said, hang on real tight for about 40 seconds. I'm going to have to play the legal disclaimer, and I will be right back. So hang tight. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Hey, Dr. Jorgensen's here. How you doing, Bruce? Good to see you, my friend. Bruce says, SPY up overnight. Easy money. It must always go up. That is a lie, of course. Yeah, we've been doing pretty good recently with our buy the SPY in the afternoon and sell it in the morning. Another up day today. So, but Bruce is right. It must not always go up, and there's going to be times with that trade where we're going to have drawdowns, just like we did in the month of May. We, in the aggregate, we lost money in the month of May using that approach. But that's like any other trading approach. Sometimes you're going to make money and sometimes you're not, right? So it's always important to position size correctly. It's important to take a position that really doesn't bother you one way or the other, what happens with it. Easier said than done. I completely realize that, but if you position size correctly, you don't have too large a position size, you're not going to have that intensity each day of saying, I need that thing to go up, right? As soon as you have too large a position, it changes your thinking. You don't make as good a decision. So I have found in my 24 years of experience of trading is when I have a large position size, my thinking is not as clear. When I have a small position size, my thinking is clear. So that's what I would recommend to everyone is make sure you position size correctly. A 5% position size, a 10% position size, is a good conservative approach. So, all right, well, let's take a look here and take a look at my current positions. So boy, we have had this we have had this QQQ position for a long time, and I'm not complaining because it's been a really good position in a trade. But we bought the Qs back here on June 4th, and why did we buy them? Well, the signal, there were multiple signals, but the main signal I was looking for is that whenever the Qs are under the 200 or the 250-day moving average, I like to stay out of them. The particular signal that I took was on the day that we entered this trade, it went from closing under the 200 and the 250-day to closing over the 200 and the 250-day. That's a good quantified profitable back testing system of the Q. It's that simple. Stay in the Qs when the price is above the 200 and 250-day moving average on a closing basis. Get out of the Qs when they're under. It's that simple. So the previous day it was under, the next day it closed over. In addition to that, we triggered a nice V2. Here's day 1, day 2, day 3. Day 2 washes out or goes below day 1 by more than a quarter ATR. This one was larger than 1 ATR, about 1.5 ATRs. And then the next day, day 3 closes back above day 1. The market just showed that it didn't, whenever you have a V1 or a V2, the market shows that the prices it just visited were rejected and there were no more sellers down there. And so if you're going to get into a long position, it's nice that the market has just recently told you, just in the last day, that it does not like the prices down there. So, and then in addition to that, here's the third ATR channel. In addition to closing under the third ATR channel the day before, it closed back above. So we had a V2 entry, we had a close under the 200 and the 250, we were under the third ATR channel, closed back in third ATR channel. So that's why we took the trade. And the reason that it's important, the reason I'm bringing up the third ATR channel is most prices stay below the third ATR channel and above the negative third ATR channel. So most prices about 90% of the time stay in this range. So if you go under the third ATR channel, close back above the third ATR channel, that's a good signal. But on top of that, we had the V2. On top of that, and the one other one was that we closed under the 30 RSI and then closed back over the 30 RSI. So we had the V2, the close back above the 200 and then 250, the close back above the third ATR channel, and the close back above the 30 RSI. So I did take a full position on this. I have been scaling out all the way up here. That's why I've kept this for so long. This is a mechanical trade, meaning that I'm just like a robot going to trade this and hold this as long as it's above the 200, 250 day moving average, but I do scale out as it goes my way, so that if it goes all the way up here and comes all the way back down here, it wasn't for nothing, right? So I have scaled out of the majority of my position. Did hit two profit targets yesterday, and you can see we did get the very top of the market today as well. So each time I phase out, I'm lowering my position size, lowering my position size. I don't have much left, but when I got into this trade, I determined it was a mechanical trade, like a robot, so that's what I'm doing. This has been a great trade. It's been a great profitable trade. Okay, so speaking of the SPY, in case we have some new viewers today, I do buy the SPY each day at the close. This is every day. I buy the SPY at the close, as close as I can get to the closing price, and then I sell it first thing in the morning. And I do this day after day after day, and I do it based upon this particular back test. So this is from Lizanne Saunders at Bespoke Invest on Twitter. It's a good channel. Here is the back test. Since 1993, if you would have bought the SPY on the open in the morning, sold on the close in the afternoon each day, you would have actually returned a negative 5.2%. But if you did the opposite and you bought on the close in the afternoon and you sold first thing in the morning, on the open the next day, you would have returned 568%, meaning that more than all performance from the SPY from 1993 came in after hours trading, right? So that's important information, powerful information to know. So since 1993, the entire return in the market has come in the after hours. It's come in the after hours trading. It's come in the pre-market before the market opens. And what this essentially means that that's where all the buying came from, and then it was sold into in the morning. So the green line here is the buy in the afternoon, sell in the morning. The red line here is the buy in the morning, sell in the afternoon, and you can see it's not even close. The edge comes in the after hours, and so that goes for all sorts of type of trading. You know, holding overnight is an edge in itself, and it's shown here very clearly that's where the return comes. There's a lot of day traders. I know they like day trading because they don't have to hold overnight, but as you can see by this data, they're missing out really on the majority of the returns. So this was up until the beginning of 2017. There was another test done up to January of 19. So instead of the buy in the morning, sell in the afternoon, instead of minus 5.2%, it was actually minus 13.9%. And then the buy in the evening, sell in the morning. Back in 17, the return was 568, and up till January 19th, it was 634%. And then Stephen Burns, who's a friend of the show here, a good friend of mine, and a mentor and an author, famous trader, just all around good guy. He did a more recent study up till about 10 days ago, and the buy in the afternoon, sell in the morning actually returned 712.63%. So over and over, long term, this shows that it is a good, profitable, back-tested system. There are drawdowns for significant amounts of time. So like any other system, you know, you have to take the long view on this, and you have to position size correctly, because if you would have started right here, you would have had a couple years of drawdown, and you're like, this is the worst system in the world. But you have to look at it like everything else in the big picture. So please position size correctly. All right, so with that said, yesterday we did buy at the close 290.54. This morning sold it first thing at the open 291.29. So a nice easy overnight gain on this position. The day before, we bought right around this range here at the open, and again it opened up higher. So you know, we held it overnight, get out. Buy it at the close, hold it overnight, get out. It's higher than when we sold it today, but you know, that's fine. I will be buying the SPY again today, as always. Again, I just look at this as a long-term trade, literally like a buy and hold, but it's not buy and hold, but a long-term trade that I'm going to be in the SPY all the time, but I'm only going to be in from the afternoon until the morning because the statistics show us that that's where the gains are. So, hey, Mount Doji, hello to you too. How are you doing? What's happening with Mount Doji? You still reading your books? I saw that you looked at, what was it, Reminiscence of a Stock Operator. That's a good book. That's a classic. That's a classic. So, okay. Let's go to our next trade. So this was my stinker of the day. And, you know, this is a good example of sometimes you have a trade that you have a lot of hope for, like a lot of things line up, and then it doesn't go your way. But, you know, that's just how it goes. And I realize when you have a really good setup, you kind of more than usual or normal think, oh, this is going to be a good trade. But, you know, just because everything lines up does not mean it's going to go your way. So I did short TLT. These are bonds. I did short this yesterday at 131.98, and this red line here, this is going to be my stop. So if we have a close above this red line today, I'm going to go ahead and get out. But let me explain to you why I took this trade. So here we have a high. You can see the how high the MACD bars are, very strong. Then we come back, we have a pullback. Then we go ahead and we make a higher high. This higher high should be confirmed by higher MACD bars, but you can see there's no green bars whatsoever. And so that's very bearish. That is called a double top with a bearish MACD divergence. It's actually called the missing right shoulder because, again, this high is higher than here. Therefore, to confirm that this high here has a lot of strength, it should have large green bars, but it doesn't. So this is showing that the momentum failed, was waning on the way up. So on Q, it went back down, right? And then my approach to this trade was after we have this double top with a bearish divergence, then we have an attempted reaction rally here. If this rally fails, then that is where I'm going to get short. And I did get short, and the reason why is we had a V2 to the downside day one, day two washes out the high of day one, day three closes below the low of day one's close. So, you know, what's going on with the buyers and sellers here are, you know, here the bulls were in control. Then the bears got control. So all the buyers that pushed us up here got overcome by bears. Now this first move down here, people that were short from here likely were going to cover. That was going to bring in one group of buyers. People that missed this run up are likely to buy this dip. That brings in another group of buyers. So that, in my opinion, is what drove this reaction rally back up, was these two groups of buyers. But if it keeps going up, then fine. But if it fails, then the people that bought here, sold here, these buyers are out of the equation, and it couldn't go up anymore, and it failed. So that is the thinking behind this particular trade. Now listen, if you take this trade 100 times, you're probably going to win 65, maybe 70 times out of 100. But this is one of those situations where it didn't go our way. So my stop was a halfway of this washout bar. You can see currently it is above. So if this closes above 132.92, I'll go ahead, just take my lumps on this and get out. Because remember, we always want to keep losses small when we're wrong. You know, well, I'll get to that when we take a look at the quote of the day. But on the bright side, I only did take a half a position here, and the reason why is because it is in an uptrend. And if it's in an uptrend and I take a counter trend rally, because I'm going against the larger trend, I only take a half position. So I did only take a half position on that. So, that's the silver lining. But again, we'll see what happens at the close, right? Because the close are the most important prices. Intraday, it can do anything. So if it closes under 132.92, I will go ahead and keep the position. If it closes above, I'll go ahead and just take the loss on the position. Okay, so this is my option trade that I've been talking about for the last few days. I did sell an option here back on 624. I sold an option, so that's a bullish trade. And then I wrote the option down here to $24. So essentially, when you sell a put, when you sell it, you get a premium. If the price stays above the strike price at expiration, me as the seller of the put keeps all the premium. If it goes down here to $24, then I'm required to buy it. But if it even closes at $24.01, I keep the entire premium. But if at expiration it closes down here, below here, I'm responsible for buying it at $24. Now, why do I want to buy it at $24? Well, I usually like to look at these on 3 time frames. So let's start with the monthly. So on the monthly, the $24 mark is right around the 10-month moving average. It's also around the 1 ATR channel. It should, on the monthly time frame, because I like to look at things in multiple time frames, but it should have some support there. There should be some built-in buying. Not for sure, but nothing's for sure. But you have to kind of look at these things and say, okay, where would buyers come in on this time frame? And this is a good, this is a good spot. So on the monthly, pretty good there, has support at the 1 ATR, has support at the 10. On the weekly, so this is the weekly time frame, that $24 mark lines up nicely with the 50-week moving average and the -1 ATR channel. So it should find some support at the 50 on the weekly as well. And if you go back in time, you can see the 50-week moving average has acted as support. The market has respected that particular moving average on that time frame. So I have things lining up on the monthly. I have the 1 ATR channel as support underneath. I have the 10-month moving average as support underneath. On the weekly, I have the 50-week support underneath. I have the -1 ATR channel support underneath. And then on the daily, the $24 price puts me right about the 30 RSI. And as you know, I like to key off the 30 RSI because generally there are buyers that come in at the 30 RSI as well. So on 3 time frames, it's telling me that there's a lot of support for $24 on all 3 time frames. So doesn't mean it's going to hold it. It could just go right down through, and that's tough. But when I sell puts, I really look at this in multiple time frames, and I say, look, you're going to have to buy that if it gets there. That price better line up with a lot of support on a lot of different time frames. So I think this is out till July 19th. So if it stays above $24 by July 19th, I'll get to keep all the premium. I could take the position anytime I want. I'm certainly up on the position right now. I have about half of the premium that I'm going to get already. If I get up into that spot where I'm getting 80% of the premium, even if there's 2.5 weeks left, I'll go ahead and just lock in that profit. So it doesn't really mean I have to hold it that long. So anyway, this is doing well. Obviously, the more it goes up, the better. So those are my positions right now. Q's, 1 profit target today. SPY, we had the nice overnight trade again. It gapped up. Q's, I'm sorry, TLT, if it closes above 132.92, I'm going to have to go ahead and just take the loss, and then AMD is our put position option wise. So, all right, let me take a look here. Okay, so listen, before we get into going through my watch list, I did see a saying that I liked today. It's from at YVANBYEAJEE, Trading Composure. But even though you want to use trading as a vehicle towards freedom, the act of trading is anything but freedom. It's about restraint and doing what is right instead of what is comfortable and easy. Hence, it is often an uncomfortable process. And it's so true. I mean, in order for you to trade for a living or trade for many years, you're going to have to get rules in place. You're going to have to follow the rules. It's not like you're just shooting from the hip, doing whatever you want every day. I promise you it's not going to work, right? You have to have a quantified, back-tested plan that works. And more importantly, you have to follow that plan. So there is not a lot of freedom in trading. There's a lot of rules that you have to follow. It's about restraint and doing what is right instead of what's comfortable and easy. Comfortable and easy in trading usually does not work out. Restraint in trading, the longer you trade, and I've done it for 24 years, I can look back upon my trading career and it comes down to this word, right? That's why when Andy said, hopefully we'll find some setups today. Yep, maybe we will, maybe we won't. But the key word every day, everyone, please use restraint. Make sure everything's lining up. Make sure it looks good before you take the position. And one other one I saw here from Stock Market Mentor LLC, that's Dan Fitzpatrick. Best entry and be willing to stand aside if you don't get it. And it's so true, right? If you don't get the right entry, don't take it. Stand aside, use restraint, as the other meme just said, right? So, and you may have a good entry on something, but the risk to reward may not be good. So you have to just let it go, right? Everything has to line up before you take a trade. And if you don't, just sit on your hands and just wait until something does. All right. All right. Well, speaking of restraint and entries, let's go through here and see if we can find something, but let's have some restraint as well. All right, so Apple's had a tough time here at this $200 level. You can see yesterday it poked its head above, closed below. Today, poked its head above, closed below. So technically, this is a false breakout. It broke out of this range, and depending where it closes, it looks likely that it might close below. So nothing on Apple. I don't like the false breakout to the downside. I don't like that we're up near the third ATR channel. So nothing on Apple today. Where would I be looking to Apple? Somewhere down in here. I've been looking, I want to get a dip. Be careful about buying momentum. Be careful about buying too high. I feel like it's better to buy things back in the value zone, better to buy when you have the moving averages being rejected and closing back above. So nothing on Apple today. Advanced Micro, that's our put that we sold. Amazon. So, we've had a couple good trades on Amazon. I did buy Amazon here when it closed back above the 200. It was a 2-day trade. Locked that in for a nice profit. I did buy again back here on June 14th, and I bought it because we had the 5 crossing over the 50 moving average. It's a good back tested approach. I held on to this trade for 2 days because the next day was the Fed meeting, and I like to get out of positions or reduce my positions when there's big news coming up, like like federal announcements, the Fed announcements, or earnings. And in addition to that, I didn't like the action on the day that I got out where we tested that third ATR channel and closed down. So we had a nice 2-day trade from here to here, and we had another 2-day trade from here to here. And then after that, I have not been in the position since then. Boeing. So, boy, Boeing had that big, strong move up. I was looking for an entry halfway of this bar to resume the uptrend. Didn't quite get it. Yesterday, it did reject the third ATR channel and the 100-day moving average. And then today, there was some news on Boeing, with their 737 Maxes, and it gapped down. So, obviously this would be a better place to buy it than up here. It didn't like the prices down here. It's a 54.93 RSI. It is halfway of this bar, but I think I'm going to let this go. I mean, obviously it still could continue up, but this feels like a stretch. This feels like I'm looking at this chart and trying to make it look good. And the longer you trade, you'll find out that when you look at a chart, you'll know whether or not your nervous system will tell you if that's a legitimate trade or if you're trying to finagle it into a legitimate trade. Like there's a little angel and a little devil, and you better listen to that angel. But it comes with experience. But when I look at this, I mean, certainly could go up, but I would rather get a really good entry. I'd like to get a good entry with a good risk to reward ratio. And so close below the 100 or close back above would be my preference. So nothing on Boeing. Alibaba, I was planning on buying Alibaba on a break above the 200-day. I didn't buy it because I had some other tech, and then also we had the Fed meeting coming in a couple days. So this would have been a good purchase over the 200, but again, I already had tech on that day, and you don't want to be overloaded on tech. You don't want to have too many correlated positions. So I was hoping that we would get a close back under the 200 and a intraday under the 200 and a close back above, giving me a better risk to reward ratio, but it never worked out for me. And so that's fine, right? Some of them are just going to get away from you, and you have to just be okay with that. Don't burn a lot of calories on, oh, I should have got wide and blah, 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 right? So it is having problems with that third ATR channel. But obviously it would have been a good trade from the 200, but there were reasons why I didn't get in it. And now, buying it up here, I feel like I would be chasing it. So again, have restraint, wait for your entry. Caterpillar had a nice strong close above the 200-day. I did not buy this because it was too high based upon an RSI reading. It was close to a 70 RSI. But it just keeps on motoring up. So that's just one of the ones that got away. So that's fine. If it comes back down to like the 200-day moving average, I may look for an entry there. Canopy Growth. So, I've been watching Canopy Growth here. I've been looking for a setup. And this is one of those ones that's kind of tough because we did have a low with deep MACD bars. Then we rallied, we came back down, we tested that low. It was just as low, but there were no, the red bars were very shallow compared to how deep they were on that first move down. Then I didn't buy it here, even though it was a V1. I just felt like it was too large of a move into too large of a bar. Went down. Yesterday it went down, reversed. If this had closed above, here's a V1. Here's day one. Here's day two. Day two washed out day one. If this had closed above day one's close and had held the halfway of this large bar, I would have considered buying it because the RSI would have been pretty low at that point. Now it has triggered a V2, right? This is a legitimate V2, but Just because you have a legitimate V2, you have to look at other things as well. This is a lower low. This low is lower than here. So going from the low, we're probably going to run into some resistance at the 50 RSI. Well, we're at a 43.41 RSI now. So likely, I mean, not 100%, but likely it's going to get to the 50 RSI, probably somewhere in this range. And then it's probably going to run into some resistance. So if I buy at a 43 RSI and I'm targeting a 50, that gives me 7 points to the upside, right? Back down to a 30 RSI, 13 points to the downside. Now, in this particular trade, I probably wouldn't let it get to the 30. I'd probably use halfway of the washout bar, which is right here. So I guess technically the risk to reward would work with a close below halfway of this bar and a target of 50 up here. I'm not sure. I actually don't think it's an asymmetrical trade. I think it's close to a 50-50. And when you get into a trade, you want to make sure that you have the potential to make 2 or 3 times to the upside of what you're losing. So I feel like this would be a little bit of a FOMO trade, even though it's a legitimate V2. I totally get that. But it did reject the 10-day moving average. Who knows? This might continue to go up, but it's not an A trade. It's a B- trade or a C+ trade. So, try to make sure that you're in the A trade category, A-, A+, category before you take that trade. So nothing on CGC today. What I would really like to see at this point is, because we had the double bottom with the divergence and then the first rally, I'd like to see it come back down a couple days, then get a V1, V2 back here, because the people that bought here sold here. That's going to push it down. Then if it's strong enough to keep on moving, then all the sellers are gone from the equation. People bought here, they sold here. Now these sellers are gone, and that would make it an easier move up. So what I'm looking for on canopy growth in the coming days are a couple days down with the V1, V2, and then enter with the majority of the sellers gone from the equation. Whoa, Cisco. So, we had this double top here. It rejected the double top. It rejected the third ATR channel. Came back down. We had this bit of a rally, and then it reversed. This is the pattern I was looking for on bonds. This is what I was looking for, but it didn't work out. But this is a big bar. See how an ATR is from here to here, or here to here, or here to here. That's the distance, the average distance that this stock is expected to move in any one day. This is 2 ATRs to the downside. So that means there's a lot of supply coming into the market. People are selling a lot of stock. So I'm not interested in this. For me to get interested, I mean, we're back in the value zone. That's on one side, that's positive, but we have a big down bar that is negative. So it's kind of a neutral. So I'd like to see this find some support, stop going down, move sideways for a while, then attempt to go down and reverse back up with the V1 or V2. And by the way, I talk a lot about V1s, V2s. If you'd like to learn more about V1s, V2s, I do have a video I did last weekend. It's in my channel, how to use V1s, V2 in your trading. There's also a link in this description here, but it's a good video, and I spent a lot of time on the nuances of V1s, V2s. But do yourself a favor and watch that if you're not clear. Hopefully that will clear it up for you. But the V1s, V2 entries are invaluable for me. They're such a huge part of my trading. So if you get a chance, take a look at that. Here's the DDM. Well, we moved up. Now we're moving back down nicely in a nice orderly manner, but we're still too high. I'd like to see this move back into the value zone. So nothing yet on DDM. We did buy DDM back here on the 6th of June when the prices went under the 200-day moving average, over the 200-day. Again, this is a quantified, profitable, back-tested system. When you stay out of the DDM under the 200, you stay in over the 200. So that is why I entered with close back over the 200. MACD went positive. This was a mechanical trade, like a robot. I was going to hold this, scale out until I was out of shares, or until it closed back below the 200-day. And you see we had a really nice move up. I scaled out and got out of all the position somewhere up in here, which was the right place to do it. Dow Jones, same pattern. This is the regular. The DDM is the double leveraged. Walt Disney. Well, Walt Disney's just kind of a chop fest over here, isn't it? Looks like it's going to close lower than the open. Pretty big bar. So in order for me to get involved in Disney, I'd have to, it is in the value zone, but it's not doing what it needs to do in the value zone. I want to see it come down, move sideways, show me that there's no more sellers that want to sell, have one day and an attempted sell, and then a reverse back up. That would be what I would be looking for on Walt Disney. But right here, it's just too choppy. There's no clarity. Here is a good example of a V2 that we bought back on June 3rd. On a V2, here's day 1, here's day 2, here's day 3. Day 2 washes out day 1. That's the first requirement. The second requirement is that day 2 closes above day 1's close. And so that's why we took the position here. Another good sign for this trade was the day 2 washed out the -1 ATR channel. It tested the waters under the 1, rejected it, came back up. So we did buy it here and it went straight up for us. I phased out all the way up to here. Then got out. Then I was looking for a pullback, which immediately came, but unfortunately we did not get a V1, V2 entry back in the value zone. Well, technically we did get a V1. Here's day 1, day 2 washes out day 1, closes above, but this is not an acceptable V1 for me because the bar is too large to take the V1 or the V2 against. Whenever that day 1 bar is larger than 1 ATR, that's a red flag because it showed a lot of selling was coming in. Didn't matter in this case, went right back up, but in general, it's a red flag. So nothing on Walt Disney, Etsy. So, here we have a V2, right? We have a couple things going for us. We did test this previous low, and we do have a V2. Here's day 1, day 2 washes out day 1, day 3 is currently above day 1's close. I don't particularly like this day 1. It is larger than 1 ATR, not by a ton, but it is larger, so that's a bit of a red flag. Another red flag is even though it's triggered the V2, it's rejected the -1 ATR channel above it. It tried going up, and now it's closing back below, so that is going to act as resistance. And this double bottom here, if these MACD bars were shallow, more shallow than the previous low, I might consider it. But in this particular case, this low, the MACD bars are stronger to the downside than this low. So instead of a divergence, it's called a convergence, meaning that this move had more power, more momentum than this one. So nothing on eBay today. All right, Ford. Hey, Frederick. Hey, Greg, how are you? Thank you for your reply and analysis. Helped me a lot. Okay, good. I'm glad. Yeah, I saw those charts. It looks like you have them set up correctly. Good job, man. Proud of you. Proud of you. So here is Ford. So, we had this nice move up. We did have this orderly move back into the value zone, which is what I'm looking for. Yesterday, you can see this pink line here. Here was day 1. Here was day 2, washed out day 1. At one point during the day, it had triggered a V1, meaning that day 3's close, or day 3's price was higher than day 1's close. If we would have closed up here, I would have bought this yesterday. But unfortunately, it tested it, moved back down, and so it did not properly trigger the trade, unfortunately, right? So I had to pass on the trade, but again, that was the rule of the trade. Move up, move back down into value, moved sideways, spiked down and reversed, but unfortunately it just didn't trigger and confirm for us. And so we did what we were supposed to do and not get in the trade, even though it took off like a monster. It did trigger a fractal up here today. That is positive, but I don't think I'm going to buy here at a 60.66 RSI. I mean, I could, but the way I view this chart is we'll probably run into some resistance up here, and then what are you going to use as your stop? You're going to let it come all the way back down to here. Then your risk to reward is not correct. It's not 2 to 1. Even if you use a stop here at the halfway mark, that would, your loss would be from here to here, and your gain from here to here. So it's really just a one-to-one risk to reward ratio, which I don't like. So big move today, did trigger a fractal. I like to take fractals when they're inside the moving average, or inside the channel, the 1 and the -1 ATR channel. So just gonna have to let Facebook go. I'm sorry, Ford go. Oh man, I'm running out of time. Facebook, nothing on Facebook. 5 below. Nothing on 5 below, possibly a close back above the 200. Gold, big move up. We've pulled back. It's too high for me to do anything. We were just talking about a fractal. I did buy gold back here on May 30th when we triggered this fractal. We had a 520 EMA cross. It was inside the channel. So a lot more respectable, less volatile trade, and we rode it from here to here. It was a great trade. So nothing on gold today. Google, nothing on Google. Actually, what I'm waiting for on Google is I'm waiting for a 1030 EMA, 1030 SMA moving average crossover. When this pink line gets above the blue line, that's a good profitable back tested system, but that hasn't happened yet. So all right, here's Goldman Sachs. So Goldman Sachs looks decent today, and I'll tell you why. So it closed back. It looks like it's going to close above the 200. It did trigger a fractal, which is good. But the reason I like this is, one, it back tests well. So here's the gold. This is on etfreplay.com, and I do use this by permission. But buying Goldman Sachs over the 200-day and keeping it until it closes under, and then getting rid of it, that particular approach since 2019 would have returned you 230.1%. Buy and hold only returned 178.9. So the approach of holding above the 200 returned more than buying and holding, and the drawdown was 58.7 compared to buying holding 78.8. So it beat on both metrics. It only wins 26% of the time. It's not a high winning percentage, but the wins 5.91 compared to the losses of 1.93. So with that being said, looks like I am going to take this. The main reason I'm taking this here is because we're so close to the 200. It gives me a small loss to the downside, and even if we get up into the third ATR channel, it gives me a asymmetrical trade, more potential upside than downside. So I will be buying Goldman Sachs here at the end of the day. I'm gonna run out of time. All right, nothing on IBB. Intel, maybe a close back above the 200. IWM looks strong, closing above the 200-day moving average. I'll tell you what though, I am waiting for another setup on IWM, and that is the 1050 SMA cross, which has really good back tested results, and I'll show you. So if you wait for a 1050 cross, that particular setup since 2000 returned 319.4%, buy and hold only 267.6%. The drawdown on the 1050 cross was only 21% compared to buy and hold 58. So this particular approach, the 10 SMA crossing the 50 SMA, returns more than buy and hold and has a much less drawdown than buy and hold. So that is what I'm going to wait for. You could buy this over the 200 here, but I want to filter out some of the noise and wait for that crossover. All right, Coca-Cola, It's moving into the value zone. I want to see that move sideways, get a V1, V2. Lockheed Martin is holding the range up here. It's too high for me to buy. This was a nice entry we had here with the V1 in the channel. I like to take them in the channel. Here's day one, day two washes out, day one closes above, and you can see motored right up our way, got out right about in this area. So that was a good trade. MasterCard is down today. Interesting. We had two nice trades on MasterCard. Shorted here when we were above the 70 and above the third HER channel, closed below. We rode that all the way back down to here, so it was a nice profitable short trade. Then we had this beautiful V2. We made a higher high, come into the value zone, move sideways, spike down. Next day reverses, giving us a V2. Here's day one, day two, day three. Day two washes out day one, day two closes above day one within the channel, had a big day the next day, got out of about 50% of our trade up here and then got stopped out here. But all in all, two nice profitable trades on MasterCard. 3M, nothing going on there. Merck, nice move up, waiting for a move back into the value zone. Microsoft, a couple days ago, big move down, looking for the prices to come into the channel, looking for sideways movement in a V1, V2 to get us back in. Netflix, nothing there. Nike, believe Nike has earnings after the bell today, so want to be careful if you own Nike with the earnings. Philip Morris up a little bit today. We did have a trade here on Philip Morris when we closed back above the 10-day moving average. Triggered this fractal within the channel. Next day had a huge move up. We got out of about 40% of our position. The next day we closed under the 50R RSI and just locked in the rest of the gain, but nothing since then. PayPal, this is a nice setup here where we're moving up. We're coming back into the value zone. Nothing quite yet. Now tomorrow, if we had a V2 entry, here's day one, day two washes out day one. If day three closes above day one's close and it's in the channel, I would buy that. So, but nothing yet right now. The Qs, we already have that. We hit one profit target today. Silver had that big move up. It's coming back down. We may want to buy the dip back here in the value zone, but nothing today. The SPY, we talked about that. I will be buying that at the end of the day. Square was above the 200. Now we've lost the 200, so nothing there. But I do like to show this trade because so many good things happen here. We have a low, we have a rally, we have a lower low, we have a bullish MACD divergence, meaning that the bars here are very shallow compared to the previous low. That means momentum was running out on this second move down. We poked our head down into a new range. The next day we closed back up into a new range. We had a V2, day one, day two, day three. We closed above day one's close. A lot of good signals here. That's why we took the trade, and we had a monster trade all the way to here. So, I know it's fun to be in positions, but if you can just wait for really good, strong signals like this, you're going to trade less, you're going to spend less in commissions, and you're going to have better results. But nothing today. SSO, this is a good example here of a rejection of the 30 RSI, a rejection of the third ATR channel. We did buy this here back on June 3rd when it rejected the third ATR channel. Intraday went underneath it, closed back above. It rejected the 30 RSI underneath it, closed back above. We did buy this here, and we scaled out all the way to here. So again, this was another great trade. I didn't know it was going to move up, but I did know if I was wrong, I was going to be wrong small, and if I was right, it's going to move up nicely. AT&T moving pretty strong today, but nothing there. TLT, well, we have this. It is right at the moment. We would be able to keep this trade because it's closing under our stop, so we'll have to watch that carefully. Tesla, nothing on Tesla. Natural gas, big day today, nothing on natural gas. Oil, It's having problem up there at that 200-day moving average. The dollar, you know, we had that big down move underneath the 100-day moving average. Now that 100-day moving average is acting as resistance above us, so nothing there. Visa down today. Did the market turn negative? No, not yet. But nothing there. Well, on Visa, I'd like to see this come into the value zone and look for our V1, V2 setup. VIX is down today. Verizon, I did get in Verizon here on this V2. Was supposed to get out there. I missed it at the end of the day. It re-triggered another V2 the next day. Did hit one profit target, and then it dumped on us yesterday. So that was a losing trade. Had to get out of that trade. Today, it is up a little bit, but I would not take this, even though technically it is a V1 because of the halfway of that bar. Energy Select, nothing there. Financials look pretty good, but I'm going to buy Goldman Sachs, so I don't want to have too much of the same position. Real estate, big move down, attempted rally, failed at the halfway point. Utilities, and nothing there. And healthcare, nothing there. All right, sorry, I know I had to hustle through those because I spent too much time. But anyway, really the only thing for me to look at today is Goldman Sachs with this close above the 200-day moving average. And again, if I'm wrong small. If I'm right, you know, possibly up to here. But I have more upside potential than I have downside potential, and it does back test well on the ETF replay. So Goldman Sachs. I will be buying Goldman Sachs at the end of the day. My initial stop is going to be a close below the 200-day moving average. All right, let me take a look here.
Order filled.
All right, then we'll come over here. So it looks like I'm going to be able to keep that short bond
order partially filled.
Position.
Order filled.
Okay. So I'm going to go ahead and buy the SPY and Goldman Sachs. So Goldman Sachs.
Order partially filled. Order filled. Order partially filled. Order filled. Order filled. Order partially filled.
Whew, okay.
Order filled.
So we got those. All right, so we got SPY at 291.87. $291.87. And we got Goldman Sachs at 199.40. All right. Yes, so we got 199.40. We got SPY at
Order cancelled.
291.87. Bonds did close underneath our stop, so we were okay on that. So let's take a look all in all, see how we did today. Basically, completely break even today, which is fine with me. Big days up, break even days are fine, small days down are fine. You know, we've had such a huge profitable month that you know, want to be careful here. Want to, you know, when you start making a lot of money during the month, you feel like you're invincible, and that is never the case in this market. So, you know, whenever you're in a big drawdown, whenever you're in a downward trend, negative, be careful. You have to be careful. But on the other side, when you're making a lot of money and you're having a great month, you also have to be careful and kind of rein yourself in. So anyway, if anyone has any questions, you know, please type them into the chat and I'm happy to answer them. Don't be shy. But before I get to the answers, I do want to put in a quick plug, let you know that I do offer private one-on-one coaching and teaching sessions in the evening time via Skype. I really love to teach. I feel like I'm good at it. I have good success with my clients. I've turned a lot of them around from being losing traders to positive traders. And I like to share with them, you know, what I've learned over the last 24 years as being a money manager and a professional trader. So, you know, working one-on-one with the teacher really does help. You know, there's some nuances to that compared to just being in this chat room. I mean, here I'm doing all of the talking, and, you know, you're asking questions, but if you do book some lessons with me, you know, after I teach you, I really do turn the tables, and then I'm quizzing you relentlessly, throwing curveballs at you relentlessly, trying to mess you up. But you know, if I've done my job teaching, you should be able to navigate all my questions and teach it back to me. And it's important that you really know something when you can teach it back to someone, and that's what I require of my students. So if that's of interest, my email is in the description of this video. My hourly rates are in the description. So feel free to send me an email. We can just set up a free phone call just to get to know each other a little bit better. I like to understand, you know, how long you've been trading, how you're trading, what your challenges are, and then put together an approach designed specifically for you using good trading principles and risk to reward ratios and all that kind of stuff. So if that's of interest, please let me know. And then also, you know, if you enjoy this channel, if you like the content, if you're learning something, please do me a favor and hit the thumbs up button. It helps with Google, helps me grow the channel. And you know, I really want to do that. I want to help as many people as I can with trading. It negatively affects a lot of people's lives, and there's some simple things that we discuss here every day about keeping your losses small, letting your gains go, and let them ride. It's very important. It's simple, but it's not easy to do. But a lot of people do not know about this. So, you know, do me a favor, hit the thumbs up button, share it on social media, you know, let people know about it, maybe your trader friends, and, you know, let's help grow this channel together. So, all right, that's that. So let's take a look. Hi, Greg. Which data do you put in the Atrian of the ATR? Because I just put in a random number. Well, on those ATR channels, it's going to ask you for two numbers. It's going to ask you for what the ATR channel is going to be based upon, what moving average or how the length of days. I use a 20-day. And then the other number, it's going to ask you how many standard deviations away from that number do you want there to be. So I would put in 20 as my moving average. Then I would put in my standard deviations 1, 2, 3. I actually use 6, right? So I have 1 standard deviation away from the 20, 2 standard, 3, 4, 5, 6. So the two numbers that you should look for there, and I'm not familiar with that platform, but you know, on ATR channel, it's going to ask you two numbers. The moving average that you want to base everything off of, that's the 20, and then how many different ATR channels you want, 1, 2, 3, or 1, 2, 3, 4, 5, 6. Frederick also asks, about the chart I sent you, you mean the V2 would be better if closed above the first ATR channel, right? Not too high. Yes, you are correct. The chart that you sent me, here, let me grab it real quick. Let me see if I can pull this up real quick. So hopefully you can see this, but here was the V2. Here was day one. Day two washes out day one. It's a small bar, so that's fine. Day two closes above, but it did not close above the first ATR channel. Today it did. I mean, it moved up the right way, but the day that it triggered the V2 was under the -1 ATR channel. And remember, that -1 ATR channel above you is going to act as resistance. But today it moved up nice and strong. But on the particular day that it triggered, it was underneath. And the best ones come when the V1s, V2 triggers within the in between the 1 and the -1 ATR channel. Now, you could look at this trade a little differently, because you could say, okay, it was a V1, V2 entry that tested the third ATR channel. So, that's a different trade, though. It's a different way of thinking. So I guess you could have used that rationale here, but it did move up. Mount Doji, I'm going with XLF, I think. Okay, let's take a look at XLF. Yeah, well, there are definitely some things going for XLF. We went from under the 50 over the 50 RSI. We've moved over all the moving averages. We did have an attempted V2 yesterday, but it failed. But I'll tell you one thing. You see this little dot right here? You see this little arrow? This is something I learned from Larry Williams. I studied with Larry Williams long time ago, about 20 years ago. And I don't know if anyone knows who Larry Williams is, but he's a famous trader. His daughter is Michelle Williams, the movie star. But I studied with Larry, and I have this indicator on my chart. And what this is indicating is, here we have a high. The next day it goes higher than the previous high and then closes underneath that high. What this little indicator is saying is this formation is negative. We have a high, we test it in reverse. That's not good. But what would be good is, because we just had this horrible bearish day, if the market was strong enough to then take out this first day's high again, would trigger this triangle. And that's exactly what happened. So I know we don't talk about this indicator a lot, but in the context that we moved up, we moved back into value, we tested these we tested these moving averages, and then we painted the triangle here. And again, here you have a high, the next day goes above the high, reverses. That's negative. But if it's strong enough in the coming days to go back over that, even though you have a negative bar, that is positive. So yeah, I don't mind this at all. We triggered the triangle, we're back above the moving averages. We're not too high from an RSI perspective. We're at 55. Risk to reward's pretty good. I mean, you might get up here to the third ATR channel. The question, always the first question to ask yourself, Mount Doji, is what is going to be my stop? And, there's a lot of latitude here as far as what could be your stop, but probably tomorrow, let's see where the 50 RSI would be and see if that lines up with anything. So the 50 RSI would be tomorrow at right about underneath the 20-day moving average. So let me mark that there. Yeah, that would make sense to me. you could use the 10-day, you could use the 50-day, you could use the 20-day moving average. I mean, if it got down here, I would definitely get out, because now you're losing all the moving averages and you're losing the 50 RSI. But, tomorrow there's a lot of different stops that you could potentially use. I would probably use the 10-day because it's an upward moving average. Oh, thanks, Dr. Jurgensen. I will have a good hike. Have a good time golfing. Mount Doji. Yep, I pulled the trigger on XLF. All right, good for you, Mount Doji. It all in all looks pretty good to me. Andy says, Greg, would you be willing to give a little color on your years as a money manager and trader? Would like to know a little bit more about your experiences. Well, sure. I was in the chewing gum business, everybody. I started a chewing gum company when I was in my early 20s. And it turned out to be a big deal. We went public. I don't know if you guys are familiar with the product called Zicam, the cold remedy. I started that company, and that was a huge success for us. And so we went public. I was able to sell the company at a young age, for a good amount of money. And so I was like, well, okay, that's done. What am I going to do now? And so I got into Bruce Jorgensen, Dr. Jorgensen, right here, that's in here every day. He was a good friend of mine, actually investor in the chewing gum company. And he's the one that actually got me into trading at a young age, right? In my 20s, in my mid 20s. And so I started trading, did not know what I was doing, made a lot of money because that was in the late 90s. Thought I was good at it until we had that first crash. And then I realized that I had just been lucky and I better start learning about really how to trade. And, when you have a huge drawdown like that, you're either just going to quit or you're going to get better at it. And so I just started studying, trading, working with different mentors, working with different, famous traders. And little by little, I just started acquiring this knowledge. So, at the time, I was managing my money at the time. But then, I have friends and they knew what I did. And so I'd help them start managing their money. And so I've been doing that for the last 20 years, managing my own money and helping people manage their money as well. So, I did put together a fund. What was that, about 10 years ago? We did really well. I felt like it was a little too stressful trading this fund with everyone's money in it. And so it was a little too stressful, a little too many people, arguing with you about why you're buying this and selling this. And so it really wasn't a fit for me. And I like to just go back then and just help manage my best friend's money and then manage my money as well. So that's kind of the story. Does that help, Andy, or did you have any other specific questions? Somehow I knew it would be pretty fascinating. Haha. It was fascinating. I tell you, if you're young and you've sold your company and you have a lot of money and you go headlong into trading, like the worst combination ever. Young, inexperience, and money. Those three things do not generally work out in the market. When I first started, I made all this money. I was like, man, this is the easiest thing in the world. And then reality came and just, slap me down. But listen, you know, to really get good at trading, you really have to have a desire. And I don't particularly like working in business and regular job anymore. And I was like, so I'm either going to have to do that or I'm going to really have to learn how to trade. And, that's why I went after the best traders that I knew, because I thought, well, they know something, they've been through it. I'm going to go ahead and, basically hire them to teach me what they know. So Mount Doji says, that is very interesting to learn the background. I had no idea you and Jay were homies like that. Oh yeah, we were homies. Yeah, Bruce is honestly like my dad. He's been like my dad for the last 30 years. And we've had a lot of fun. We've traveled all over the world. We actually climbed Mount Kilimanjaro together in Africa. That was great. Gone helicopter skiing, gone skiing in the summertime down in South America. He's a great guy. He's a great guy, and really glad that he's taken an interest in trading. But yeah, it's an interesting story. I'll tell you what. I don't know has anyone ever heard of Buzz Gum? That was the first chewing gum that I ever developed back in the 90s. It was the first caffeine gum, if you can believe it. Now there's lots of caffeine gums, but at the time, I was a professional triathlete. Actually, I was a swimmer in college, and I was a professional triathlete, and I used to take this ingredient called guarana, which, a lot of people know what guarana is now. It's just kind of caffeine. And I used to take these caffeine tablets, and I thought, I'd like to put this into a gum, because then I wouldn't need water, because sometimes you're out racing, you don't have water to swallow a big pill down. So I thought, I'm going to put this into a gum. And so I put it into a gum. I called it Buzz Gum. It really took off. It tasted horrible. Initially, it tasted horrible. I can't believe people would chew it, but people liked it. And from there, we developed like weight control gums. We developed vitamin gums. We developed dental gums. And at a young age, I had these finance guys come to me and they said, hey, we want to build a factory. And so we built the super high-tech factory in Phoenix. Then we went public. Then we developed, we were developing a cold and flu gum. And that cold and flu gum, the scientists that were developing it said, hey, this would work better as a nasal gel. And that is where Zicam came from. So pretty interesting story. Yeah, it definitely was. You know Buzz Gum, Mount Doji? Buzz Gum, yeah. Frederick says, how do you characterize a good trader? Well, I'll tell you, Mount Doji. I've got a little thing here that I'll show you. So this is from Steve Burns. Everybody knows Steve at S. Joseph Burns, but he had this good post here. And this is Ed Sakota. And we've talked about Ed Sakota before, but to answer your question, Frederick, this guy's considered one of the best traders in the world. And the essentials of a good trader: ride your winners, cut your losses, manage your risk, use stops, stick to the system, file the news. Not exactly sure what he means by a file the news, but I think probably what he means is don't read the news. I have a feeling that's what he means, but the characteristics of a good trader: you have to let your winners run. That you have to have large winners to pay for your losses. You have to cut your losses, right? We talk about this every day, but people don't do it. They don't want to be wrong. So when you lock in a loss, you're wrong. If you don't lock it in, you can always say, well, it's just a paper loss, but so yeah, let your winners run, cut your losses, manage your risk. It's very important. Everyone thinks about making money. They don't think about the risk. And they don't think about the risk on one trade or multiple trades. Remember, you have to manage your risk on an individual stock, but you also have to manage your risk on your portfolio of stocks. Right? You can't have like 20 different stocks in the same industry, but having a small loss on each one, right? I mean, you have to have a variety of different stocks in different industries. You have to manage your risk both on a portfolio level and both on an individual stock level. Use stops. Well, that goes along with cutting losses, and stick to your system. You know, a lot of people have systems that work, but they get in and they fiddle with them, and then they're not going to work, right? You have to find a good back-tested system that works, and then you have to follow it. So I hope that helps. Andy says, guess you'd better patent a gum for traders. Yeah, we should bring Buzz Gum back. Stay awake trading, whatever, right? Yeah, I was in the gum business a long time, boy. I'll tell you what. I always liked gum as a kid. I used to sell it to kids in my elementary school. So I guess it was destined for me to get in the chewing gum business. Chew gum while you trade. It's good for your brain. That's right. Did that help, Frederick, on the characteristics? I mean, stuff we talk about every day. Cut your losses short, let your winners run, have a plan, stick to your plan. Don't have too much position heat, meaning don't have too many stocks in one particular area. Have a diversified portfolio of your stocks. Yeah, stop listening. I'm telling you, the news portion, the traders, the famous traders that I have met and worked with before basically said, yeah, I listen to the news because I generally just do the opposite of whatever the news is telling you to do. You know, if we go to CNBC right now, it's probably going to have some slant to it about being bullish or bearish. You know, it's probably going to be exactly the opposite. You have to remember, you know, the news stations out there, they are wanting you to think a certain way. They want you to get bullish or bearish. And if you look back in time, you look back on charts, whenever the news was the most bullish, was probably near the top. And whenever the news was the most bearish, was probably at the bottom. So all right, everybody. Well, anyone else have any other questions? So it was about a break-even day today. You know, it's been pretty tough trading these last few days. It's been kind of whipsaw all over the place, no clear trends. And that's fine. That's just part of markets. Markets don't always just trend up nicely. They don't always just go down nicely. A lot of time they're chopping around, and so you have to deal with what the market's giving you. Mount Doji says news stations' priority is to entertain. They need strong opinions more than boring faces. Yeah, I agree. And it'd be nice if they actually came out, made a bold prediction instead of backseat driving when something comes out. They'll give you the explanation of why it happened, but it's always after the fact. It's never before the fact. So all right. Well, listen, tomorrow's the last day of the trading week. We'll see what happens. You know, we have the G20 meeting coming up with President Trump and President Xi. That's going to be really interesting to see what happens. I think it's tomorrow and Saturday. So who knows what's going to happen over the weekend. It could be really volatile. So we're going to have to watch out for that, right? So, all right. Well, look, I'll be back tomorrow, God willing, during the last hour of the market. So if you can make it, that would be great. It's always great to see you. So thanks to Mount Doji, thanks to Frederick, thanks to Johnny, thanks to Andy, thanks to Bruce. And did I miss anybody? No, I think that's it. So All right. Have a good rest of your day, everybody. And hopefully we'll see you tomorrow during the last hour of the market. Take care. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.